Hi everyone, I hope you're well. This is CoinsKid. Just going on to Bitcoin, big of the CoinsKid crew. So there's something that's happening in a couple of charts right now I'm going to show you that could be pinpointing a little turnaround for Bitcoin. In the CBBI just there, it's currently sitting at 33 on September the 7th, 2023. And right now we are still making a series of higher highs and higher lows here for the CBBI, aren't we? You know, that crash that we went through recently, we've still not lost that low of 33 that we put in June, okay? So obviously, if we start to come down like this and we make a lower high and lower lows and so on and so forth, then we're looking at a deeper retracement, deeper correction to where we've come from. But you know, way back last year we was keeping an eye on this, wasn't we? Coming down, I was including it in all the videos. People says no way, rubbish indicator and things like that. But I said to you, once it goes dark green, that, you know, historically has always shown us that that was a sweet spot to get involved in Bitcoin. It got all the way down to level 2, broke out, back tested it, held the low, still dark green, still an optimal entry point, and then it's broken out, okay? And in this breakout in the CBBI as well, you can clearly see you've got the 1, the 2, the 3, the 4, the 5. So you've had 5 waves up. So we have to respect that, okay? We have to respect the 5 waves up. You know, that's what it's all about. If we've seen 5 waves up, that could actually be impulsive, but a lot of people, they don't feel like it is because obviously they've been used to it coming down for so long, they're not used to these 5 waves. But when you see the 5 waves coming up, it tends to mean that you're in an impulsive move to the upside. And then what you're looking for is a corrective wave coming back, holding a higher low before you start to go back up the stairs. It really is that simple. So I think what we've got, a confidence in the CBBI as well, is I think that what we've got is a top, an impulsive move top for Bitcoin that began November last year up to April this year. Okay, so it lasted 5 months. So from that time in April, we did experience Pepe take off, Ethereum took off, lots of altcoins really did well, like Maker and things like that. Litecoin ran up, you know, and it's come down to that trend line as well. For those of you who are not into Litecoin, I did make a video expecting a big crash into the halving, which we've got, and down to a particular level of support as well. So there's a lot of coins that are sitting on key levels of support right now on really strong trend lines, you know, macro trend lines. We've got Litecoin, we've got Ethereum. I will make a series of videos, but I have been posting this data inside the Discord for the CoinsKid crew. Now, equally, inversely correlated to this is the DXY. I'm going to show you that today, what the DXY is doing and what I think it's running into. And at that point as well, that could be the absolute sweet spot when the DXY runs into this level of resistance. That could be the sweet spot for Bitcoin to turn around, okay? But again, there's no bias. If we do drop suddenly and we start to come up and make a series of lower highs and lower lows, then we've got to look at some kind of big macro correction like what we went through from 2019 into 2020. Now, do I think we're going to get a big correction like that? Anything's possible, but at the moment, I'm just respecting the data and respecting the charts. I think April was the top of an impulsive wave for crypto. There's lots of confluence, okay, for Bitcoin especially, and I think you've been in some kind of flat correction here, and I think actually we're in a C wave, and obviously C waves only offer opportunity, don't they? So I'm looking for the C wave to bottom out. Possibly it's already bottomed out. There's many indicators that's showing it as possibly has, and right now I'm looking for it to come back up, take out the high, and just continue with the show, because this, in my opinion, is an impulsive wave 1, which we've gone through for Bitcoin from November to April of this year, okay? Then we're having some kind of macro correction wave 2. Once that's finished, I think Bitcoin will be in a very powerful wave 3. So at the moment, I think that this is offering nothing but opportunity, although it doesn't feel like it, okay? Now this third wave, it could be fueled by something, you know, there could be something lining up for this third wave. Is it the spot ETF approval? I don't know. But there's something gearing up for a very powerful wave 3 here for Bitcoin, okay? So let's dive into the DXY and take a look at what's going on right there. So looking at DXY on the daily time frame, we've had a huge move down here, haven't we, for the DXY, okay? A little bit of a bear trap there as well for the DXY. But right now, what the DXY is doing, because it's coming up like this, look at this ferocious move here from the DXY, possibly some kind of V-shaped recovery. Look at that, okay? It's getting everybody super bullish on the dollar and really bearish on risk, okay? But again, I've just got to respect the data, just got to respect what's happening. At the moment, the trend for the DXY is down, isn't it? You know, you've come down, and all you're doing right now is retracing back up for the continuation. So just here, what we've got is this compression pattern, bit of a bear trap on the DXY, and right now we're breaking out of this wedge, back test the neckline of support, so there's confluence of this trend line, and right now we're attacking these key levels of resistance, okay? So I think there's a turnaround point here for the DXY. I'm going to show you a target that I'm looking at on the DXY before I think that Bitcoin could begin to turn around. So if you take a look here, let me drop a horizontal ray in just there on this point of contact. You can clearly see, like I've said to you, when you break out these wedges, okay, always target the points of contact in the wedge and the trend line, okay, as key levels of resistance. You can clearly see that was your point of resistance at which this come back, and it's broken out again. So I think that the DXY is looking for this particular level of resistance just there before a potential turnaround and continuation to the downside, which would lead to that huge wave 3 what we're looking at for the Bitcoin right there. Okay, so I think that what we've got, personally, I think, you know, the DXY is looking for that before we've got a turnaround on Bitcoin. Again, I could be completely wrong. So I think the DXY is looking for 105.68. Now you could just kick back, relax, and wait for that level to be hit on the DXY before actually jumping into any longs or spot positions on Bitcoin. It's entirely up to you, but I would actually kick back and wait for that. But again, nothing I say is financial advice, but it looks as though we're breaking out of this wedge here on the DXY and we're trying to march towards that level of resistance. Now I do think there's a bit of confluence stacking up in this chart that we have actually been in this ABC correction for the DXY since April as well. Okay, so what I'm going to do is drop the Bitcoin chart in for you right now. I think that what we've done, it's quite difficult to see, but this has been a confluencing factor for me for the DXY breakdown into 2023, that we would see a big run here for Bitcoin. Okay, and we've got that. Originally, when we broke down on this wedge, we did back test its support, but the target was all the way down here, wasn't it? And eventually it got there. Okay, but what we've done for the DXY, obviously we've come down the stairs, and Bitcoin is inversely correlated, come up the stairs. So I think that what we're doing right now, and there's no bias, unless we start to take off here for the DXY, and we really do to push up through some of these fib levels, for example the golden ratio right here at 108.63 and the 0.5 fib at 106.84, then I think we're just looking for retracement before continuation, and the confluence is the inverse correlation with Bitcoin. So let me show you right now that what we've got here for the DXY, we broke down, okay, and then April here we double tap this bottom on this neckline, and you can clearly see this is some kind of top for Bitcoin. So I think that what we've got here is 5 waves up here for the DXY, okay, some kind of A wave, and this was 5 waves down for the Bitcoin, okay, some kind of A wave as well. Then I think we've got an ABC correction, which is the B wave, okay, and here we've got a 1, 2, 3, we've got some kind of big B wave as well for Bitcoin. But at that point here, what we did do for Bitcoin, inversely correlated to the DXY, we put in a bull trap on the orange line, and we put in a bear trap on the DXY. So I think that what we've got here, you know, as confluence, is that this is actually a C wave in a big ABC correction, some kind of flat correction, and I think that this is the C wave for Bitcoin. So I think that what we've got is the DXY simply retracing to a level of resistance before continuation, possibly the technical target of this wedge, which is here. So we'll look at that resistance coming in, and when that gets met, that could be the sweet spot to enter Bitcoin, because this is where this will begin to turn around and continue to the downside. Now you can clearly see if we do get another big drop like we did for the DXY from 2022 into 23, then, you know, we're going to get a massive move here for Bitcoin as an inverse correlation, aren't we? Possibly something like that again, as this comes down and continues with the overall trend, coming back down to key level support down here, then we're looking for Bitcoin to do the opposite. It really is that simple. Okay, so we'll keep an eye on the DXY. I think your technical target for the DXY, breaking out of this wedge, you've met that target, resistance back to test support, and right now you're breaking towards that white line. So 105.68 is the technical target I'm looking for on the DXY before it turns around and risk becomes more appetizing. Let's take a look at the S&P 500 right now. So looking at S&P 500 at the moment, we're doing okay. Obviously there's no bias. If this turns a corner and loses a key level of support, which I'm going to show you right now, then this is beginning to look really bearish, and risk and Bitcoin and crypto could be in a world of trouble, you know, and we'll flip that tide if it does come to it. But at the moment, what we've got, and you know, people didn't believe me, but we've got this beautiful, lovely little breakout back test, and I said to you, this is where it said as a wave 3, okay, but what we want to see is this level of resistance taken out for me to get really excited about a wave 3, and equally the beautiful buy and go to the beach from CoinsKid. Okay, so you can clearly see ran into this resistance, back tested this golden cross on the S&P 500, and we really are taking off right here. Okay, so obviously there's a key level support here that I need to show you that is indicative of a very bearish reversal, and obviously just continuation of the upside here for the S&P 500. There's a little bit of a bullish pattern that's beginning to emerge as well, which I'm going to show you for the S&P 500, but so far so good. This beautiful buy and go to the beach that I brought to your attention way back in May is proven fruitful so far. Okay, so there's been 18 instances of this particular signal since the 50s, you know, where the S&P 500 has actually retained the low and then taken out the high. Okay, so what I'm looking at, like I've said to you, I think that we're working our way up here through the fibs, we're taking them out each level at a time, but I think if we start to take out the one fib, which is the all-time high, I think the minimal target is at 1.272 at 5259, and then I think we might see a big major blow off top right there to the 1618 before a massive sort of crash here for the S&P 500 and obviously Bitcoin as well. Okay, this is a scenario I've been looking at for a very, very long time right now. If you've been tuning into the channel for the past couple of years. So anyway, what I think we're going through right now, given what the DXY is doing as well, we've got a correction that's coming in for the S&P 500, okay, and risk, and what we've got is a correction coming in for the DXY, and there's confluence in that, okay. So at the minute, I think that what we're going through is a correction. You can clearly see we found support on the 20. If this does begin to break down again, then I'm looking for a key level support on this yellow line around about 4195, and equally the 55 EMA, and we've got a perfect ABC zigzag correction right there for the S&P 500, okay. Now at that point, if it does do that, everyone's going to get super bearish on risk, okay, and super bullish on the dollar, but we've found a key level support, some kind of beautiful ABC correction. Now the bull market support for me right now is this high here. Do you see this high, the 0.5 fib? If we do begin to break down below all this support and we take out the 0.5 fib at 4102, then okay, I think we've got a looking glass, and I think we could be in a world of trouble for risk, and especially Bitcoin. And at that point, you would begin to really see the dollar take off, okay. So we'll keep an eye on this going forward, but so far so good. We ran into a high just there, we got a little bit overextended from the EMA right there, and we look like we're coming in for some kind of correction. Whether or not it's flat, you know, and we start to take off, who knows. But once this bottoms out and starts to take out that key high just there, then, you know, we're looking at continuation. The S&P 500 really is that simple. So for me, I think that there is a pattern that's beginning to emerge here. If we take a look at this, we drop a trend line in just there, you can clearly see that this level of support just there is now resistance again. Do you see that? There's resistance there. Back test of 20 broke out, it became resistance once more, and it's becoming resistance again, okay. So I think that what we've got here possibly is a left shoulder, a head, and a potential right shoulder that's carving out right now for the S&P 500. Now you can clearly see we came all the way back down to that neckline there, didn't we, and attacked that level of resistance once more after failing to get through it right there, possibly creating the right shoulder. This has been the big head, ran into the same resistance again, possibly some kind of ABC back down to this neckline and attack that level once more. Now if we start to see the S&P 500 take out this neckline, then I think you've got a technical target right here of a massive bullish inverse head and shoulders pattern, okay. Something like this. Let me show you right now. So there's your left shoulder like that, there's your right shoulder, and your right shoulder is beginning to carve out right now. And if you break this resistance, okay, this neckline for the S&P 500, I think it could be a massive looking glass to a huge move here for the S&P 500. Now the technical target would be from a neckline all the way down to the head, and you can clearly see that if you do begin to break out, this is where you're pushing up to the 1618, isn't it? And you're going to meet that beautiful 1618 target that is always a target of mine once you take out the 1 fib. So there's a little bit of confluence lining up in this particular bullish pattern that we might be forming right now for the S&P 500, okay. So it can't be too bearish just yet whilst you're carving all this out, okay. So I hope you enjoyed that update. Stay healthy, stay strong, stay tuned. Thank you for support. Big up the CoinsKid crew. Take care. Bye bye.